everybody, you're in the right place. If you're here to see what is a VA funding fee, who has to pay it, who doesn't have to pay it, strategies to minimize your costs, and finally, the new rule that will allow veterans to save money on their funding fee. So today we're here with Scott Dunn. Thanks for being with us today, Scott.
No worries.
So Scott is a loan officer here with Morgan Financial. You've been here for how long?
8 years now.
Is it 8 years?
Yeah.
Wow, time flies.
Yeah.
No kidding, man. So Scott, tell us a little bit about yourself.
I'm retired Air Force. Served for 21 years, 4 months, and 5 days, but who's counting?
Thank you for your service.
Right on. And then kind of met Dave on the outside and kind of worked my way up through the company since 2014, I think it was.
2014, yeah. He says met Dave on the outside, right?
Yeah. Outside of mortgages, but
right. Yeah. Cool. Well, thanks for being with us today. We're going to talk about VA funding fees. Scotty's no stranger to VA funding fees. Having VA loans yourself, right?
Yes, sir.
And being in the military, not to mention being one of the top VA loan specialists in all of Brevard County for several years now. So, Scott, we're gonna again, you have this natural connection to VA loans, but tell me, what you feel about helping out your veterans, or how you feel about that.
Well, Joe, it's kind of like getting to continue to serve, right? So I retired, out of my first career, and yet I was offered a new career to be able to help veterans, and help them get in their home. A lot of time, first time home buyers. So, it's pretty rewarding.
Awesome. So Scott, we're talking about VA funding fees today. So tell us a little bit about what is a VA funding fee.
A VA funding fee is basically kind of like an administrative fee.
Okay.
That the VA charges to a veteran in lieu of you don't have mortgage insurance with a VA loan, nor is there a required down payment.
Right. So no down payment, no mortgage insurance, and the VA funding fee the veteran pays, it's a one-time fee?
Yes, it's a one-time fee that actually can get wrapped up into the loan itself.
Okay, so I was going to ask you that too.
To the table. Yeah.
So it's not necessarily a cost that they have to bring cash to the table. It's the
Correct.
cost not to have mortgage insurance and not to put it down payment.
Exactly.
Can a veteran put a down payment on a VA loan?
Absolutely. They can put down a down payment, and that will actually help them out because it'll lower that funding fee. Depends on if you're putting 5% down, or 0 to 5% down, or 5% more. And if you're putting 10% down, then it lowers even more.
Okay, so is there an advantage to put, say, 20% down on a VA loan?
Lower your monthly payment by set amounts, but there is no more advantage after 10% as far as the funding fee goes.
Okay, so at 100% financing, they get charged the full funding fee, which we'll go over those in a little bit.
Right.
And then at 5% down, there's a threshold that has to be hit, and then there's a reduced funding fee.
Correct.
And then at 10% down, it reduces again.
Correct.
And then there's no advantage after 10% more than, like you said,
other than
lowering your payment and things like that. Are there any circumstances where a veteran borrower is exempt from paying the funding fee? They don't have to require
Yes, absolutely. So if you're a disabled veteran, your VA COE, Certificate of Eligibility, will have an exempt status on there. And if that exempt status is on your Certificate of Eligibility, then your funding fee is exempt.
So if you are rated disabled by the VA, you don't have a funding fee. So you can get 100% financing with no funding fee. Is there a better loan out there? I don't know.
No, absolutely not.
And the interest rates on VAs tend to be a little bit better than conventional, don't they?
Yes, they are, for a reason, because the VA is backing 25% of the loan, right? So the bank feels a lot more comfortable and will offer you, a little better rate.
Yeah, so it presents less risk to the lender because, like you said, the VA is actually guaranteeing the loan out there. Mm-hmm. And because they guarantee that loan, the banks feel comfortable, hey, I can make this loan to the veteran, and if something goes wrong on the loan, the payer is going to be the U.S. government.
Correct. Yes. Yeah.
And that's a pretty, I don't think it gets much more stable of a creditor than the U.S. government, but credit. Yeah. So that's good. All right. So the VA funding fee. So this amount, it's a one-time fee. It's based on whether you've used it. We haven't talked about subsequent use or first-time use, but first-time use is a little less expensive than if the second time you use a VA.
Correct. You got first time use and subsequent use.
Subsequent use. And are there, can that cost, do they have to pay it cash at closing?
What you're talking about?
The funding fee.
The funding fee, no, that can get wrapped in the loan, or you can pay it if you
can
want.
pay it,
Yes.
right? So the veteran borrower can pay it cash at closing, or they can wrap it up into the loan.
Correct.
Cool. And we talked about this briefly, but are there any strategies for minimizing the impact of the VA funding fee to the borrower? So you talked about different rates and fees for the different down payments.
Well, right, yeah. So just like we kind of covered before, like if you put down 0 to 5%, your funding fee is going to be a reduced amount.
Okay.
And then it will be reduced again if you put down 10% or more.
Okay. I think what we'll do is we'll put we'll put the chart in the bottom of this blog or wherever you find this contact. We'll have a link where we can share that information exactly. Because if we give you numbers now, I don't expect you to remember them, but we'll put these down below. Yeah. So really exciting news right now is that there's the VA has come out with new guidelines. Can you tell us a little bit about those new guidelines and how it's going to save the veteran some money?
Well, in April of this year, 2023, the VA has lowered those funding fee percentages.
Okay.
So that is an advantage to the veteran, so that that funding fee isn't quite as large as it used to be. Getting added to the loan.
So I have some numbers I'll share with you. So first time usage, and we'll just go over this briefly just to show the savings. But it used to be, when you used the VA loan for the first time, it was 2.3% was the fee that they paid upfront for the funding fee. And it's going to be lowered to 2.15%.
Yeah.
So that's going to be a savings. If you're doing a $200,000 loan, that will save the veteran borrower about $300. If you're doing a $400,000, it's $600. It's a $600,000 VA loan, because VA loan doesn't have a maximum loan amount, by the way.
Right.
And that $600,000 loan, this new update from the VA will save the veteran borrower about $900.
Yeah.
So that's pretty cool. Subsequent use. So let's say they've used their VA before, and this is the second time they've used it, or third or fourth. On a $200,000 loan, the VA funding fee is going to go from 3.6% to 3.3%.
Right.
And on a $200,000 loan, the veteran borrower will save $600. On a $400,000 loan, that's a $1,200 savings. And on a $600,000 loan, they're going to save $1,800.
This is basically double.
Yeah, it's really awesome. So yeah, that's really exciting for the veteran borrower. I don't know. I know you love VA loans, but for a veteran to get into a house with no money out of no down payment, it is an amazing thing. And now they're going to save extra money. I think that's awesome.
Yeah, it's a fantastic benefit. I mean, I've got two sons in the military right now, one in the Air Force, one in the Space Force, and they're both utilizing this. They didn't pay us a lot of money when we started out in the Air Force, so we didn't have that big bank account to put down that down payment. So they really utilize that to help them get in their first homes.
And you brought up a great point, Scott, because let's not forget what the VA loan is. It's a benefit to the veteran that served our country.
Correct.
Right? Yes. It's a small way for us to say thank you to the veteran borrower. And I know that the VA loans have some stigmas out there, but it really is a great loan for the borrower. It's a great way to get people into properties, which helps the whole economy and helps the whole, the real estate market and things like that.
Absolutely.
So cool. Any parting words?
No.
Okay.
Great discussion, and we'll catch you next time.
Well, I do have a pop quiz for you, though. I didn't tell you about this before. Oh, yeah. All right. So I got 3 questions for you. Okay. And they're easy. I think you can answer these ones.
Okay.
Number 1, what is your favorite movie?
My favorite movie is probably Shawshank Redemption.
Great movie. That is a really good one. There's so many good quotes in that movie.
Yeah. Oh, yeah.
What about your favorite book? If you had to pick a favorite book.
Well, several books by an author called Anne Rice.
Oh, yeah. Okay.
Vampire Chronicles and stuff like that.
Awesome.
Not trying to geek out or anything, but...
No, those are good ones.
Yeah.
What was the one with Tom Cruise, the movie with Tom Cruise?
Interview with the Vampire.
That was Anne Rice.
Yeah.
Okay.
Yeah.
I only saw the movie, didn't read the book. It was a good movie. And finally, who has inspired you the most?
Probably my dad, I would have to say, for sure. I mean, he's and he's my rock. I mean, I don't know.
Cool. Awesome. Well, Scotty, thank you so much for coming and joining us today. For those of you out there, if you're looking for someone to help you with your VA loan, give Scotty a call. Morgan Financial, definitely Scott Dunn. Thanks for joining us today.
Get her done.
Get her done. Thanks for joining us today. I hope you learned something. If we can help you in any way, please let us know. If you found any value in this, please share it with someone that might find value in it. Also, like, share, subscribe, all these things. We hope to see you next time. Talk to you soon.
Take it easy.